David Lennox, researcher and resource analyst at Fat Profits, joins us in the show right now. David, hi, morning. Just analyzing what is leading to this swift drift down in crude prices firstly.
Well, look, certainly if you have a look at what's happened in the markets over the last few weeks, we've seen obviously quite a deal of information regarding the demand side, and that is that traders are now believing that in 2019 we're likely to have a weaker outlook for global growth, and with that weaker demand for oil. So that's put somewhat of a slide under the oil price, and of course we're now in the midst of getting closer and closer to the October meeting, when OPEC will decide what's going to happen in 2019. Not many weeks ago, we had Russia and the Saudis suggesting that they were looking to cut production. Now it would seem that Russia's come out and suggested that there won't be production cuts. So the markets have really been quite confused by the rhetoric. And in that confusion, we've basically gone back to the demand side and said, all right, demand weak in 2019, and we've now seen the oil prices react accordingly.
David, when crude was at 85, one big global brokerage came out with a report, and the report headline was "Lower for long, for crude is over." Why do you think when crude prices go higher, we only get bulls and we only talk about supply, supply shortage? It's only when crude comes down from 85 to 65, the world starts talking about glut and overcapacity. Prices are making the views. I think it should be the other way around.
Well, certainly in the oil market, it tends to be the fact that production is concentrated in some big hands. That does mean that when those big hands start to make rhetoric noises about production cuts, that the market very quickly stands up and listens. As I said, we've seen some disparate noises now, or rhetoric coming out of both Saudis and the Russians regarding production. So when we see that happening, the traders tend to then focus back to the old-fashioned demand and supply equation, and with that we expected demand to be weak, and really that's what's now running the prices at the moment. Look, the December OPEC meeting's not far away now. If we can see a comprehensive and coherent announcement from OPEC and Russia regarding production, either up or down, then that will give the market some certainty, and we'll see the prices perhaps, if we get production cuts, certainly rising. But if the production increases, then we're going to see the continuation of weak prices. So the OPEC meeting in a couple of weeks' time is a key to what's going to happen going forward.
David, there are two aspects that we always establish when we're looking at the oil market, and I know we've been essentially talking about the demand-supply equation. What could come as a follow-up to that adjustment is how market sentiment takes to the assumptions on supply and demand going forward. Do you think that in this extended out trade, and it has surprised many, because below 70, the correction from the peak was supposed to be finding its floor at 70 odd, but below 70 it seems like the market is extending itself on the downside. Are we looking at a scenario which may mirror the Feb 2016 sort of a play out, or not quite? That may be an exaggeration.
No, look, we don't think it's going to get down to that sort of level that we saw back then, primarily because we have seen a number of countries come out and suggest that with the oil price at that level, their financial budgets for their countries just don't add up, and we saw the disruption to the population that caused. So I would think that most OPEC nations, and certainly their leaders, would be very careful to ensure that the oil price probably doesn't go anywhere or much below the $50 level, if at all, primarily because of that very reason. They've just got to be careful of what's happening inside their own countries politically, and with an oil price that low, it's probably not going to be good for them, and we won't see them get it to that point.
So David, what may sound like a very easy question, I guess, is the most difficult question to answer right now. Where is crude headed in the short term?
Look, one would have to suggest that yes, we've seen now a significant amount of bearish rhetoric coming out in terms of what's happening with, as you said, what's happening with demand, something that the market up until the recent months had really not focused on. That's going to continue to drive, we think, the prices a little longer, primarily because, as I say, we've had opposing views coming out of OPEC and Russia regarding their production. So until we can get that sorted out with the December meeting with OPEC, if in fact that does sort it out, then the market's going to focus on the demand side. Obviously the tariff wars have caused concerns from a growth point of view, and that's not going to change over the next couple of weeks, and the oil price may stay likely weak until we see that OPEC outcome.
Okay, so having said that, David, how do you see the current situation being maintained? I know you're saying that the December meeting will be crucial, but in the interim, do you see a fair amount of volatility in oil prices? Because nobody really wants depressed prices at this juncture. The US certainly doesn't want that. The Middle East does not want that. Saudis are not very happy with that. So do you think that, you know, even perhaps before the official meeting, some interim measures could be taken to stem this fall?
Look, we don't think so. We think at this stage it's too close to that December meeting now. We've heard rhetoric, and it's been opposing rhetoric. Getting closer to the meeting, we've heard it being suggested that there certainly won't be cuts. So from that point of view, we now really are probably going to ignore most of the rhetoric and just wait to see the actual outcome. And then, of course, the markets have seemed to be falling back into that old pessimistic way about OPEC, that what they say and what they do are two completely different things. So if we go back down that road like we had for many, many years been on, then you know, the oil market's going to be very volatile going into the close of 2018. We've kept our 74 to 84 price range for Brent, primarily because it is a bit close now to change it to any other number. But we do think that perhaps cuts are more likely than we can see increases in production out of OPEC, and that should stabilise the oil price.
Okay, good to chat with you then. Thanks so much, David, for taking the time out and speaking with us today on your views on crude.